Hi there, I'm Jaden and welcome back to Family Fire Mission. This is the February 2026 monthly SITREP. Family Fire Mission documents how a single income military family is building a second sustainable income through disciplined dividend and income investing. The objective is simple: replace earned income with reliable cash flow methodically and transparently. A quick disclaimer before we begin. This video is for entertainment and educational purposes only and reflects our personal experiences. Nothing in this video should be considered financial advice, investment advice, or a recommendation to buy or sell any security. So from the top here, we're still in the launch phase here, or we were in February of 26. We had 8 income engines active. Only 7 of them actually provided income last month because VTI is quarterly. The active reinvestment engine moving forward will be QDTE. The portfolio yield on cost is 19.06%. The monthly income by the end of February 2026 was $277.94, which gives us a $3,222.06 remaining until we reach our $3,500 income goal. That percentage then is 7.94% of the way to that $3,500 goal. The 3-month average income growth is negative $5.04, and the time to hit our $3,500 a month goal has now been extended out approximately 200 more months. The portfolio value is currently $18,293, which is about $684 less than it was last month. We reinvested or paid down margin with all of the income that we got this month. We purchased blocks out of order because of a significant dip in the ETF that I thought would come back up, and it did. So I feel happy about that purchase, even though it was out of order. Our margin usage is currently at $2,457, which is approximately 15.5% of the portfolio value. So we're trying to get that back down to about the 10% range before we purchase more assets. Our highest monthly income was still from WPA at $116. Blocks was second at $60.80, and then YMAX was third at $52.16. And our milestones, since our income has dropped below $300, we're back at trying to reach that $300 goal. We are 92.65% of the way there. So hopefully we can get there by next month in March. Moving into our performance relative to the indices here, we have overall from the beginning of our journey in November, we have been down almost the entire time. Right after we started this, the market became incredibly volatile, and we are down 10.65%. The Russell is up 6.6%. The S&P 500 is up 0.99%. NASDAQ is down 4.26%, and we are heavily in the NASDAQ with QQQI and QDTE, more so than the S&P 500. And now we'll move into our monthly checkup, our monthly monitor here. So our account value minus the margin was $15,792, which is approximately $4,500 off of what our estimate was going to be at this point in time. Our total dividends for this month were $277.94, which is $43 almost less than what we calculated or anticipated we'd be at this point. Interest, $4 off, a little higher because our income went down, so we weren't able to pay off as much margin this month. Our gross portfolio value, including the margin assets, is just over $18,000, which is still almost now $3,000 less than what we were anticipating to be at this point in time. We've deposited a total of $34.75, with $375 coming in this last month. Our cost basis is $19,141, so you can see that our cost basis is above our value at this point in time. Therefore, it's pretty obvious that we're in the negative there. Margin is at 84.5%, with $24.57 being used, and that's approximately almost $1,600 more margin than we anticipated we'd be using at this point in time. So now moving over into Snowball analytics here, we're going to start at the top. Our portfolio allocation has changed slightly, and to align kind of with our family values more. So we are in the process of reallocating capital to reach that. I'm not going to sell any positions. When we buy new positions, they will just be primarily in the cruise phase ETFs here. So we're going to enter into a SPY-I position. QDTE, XDTE, and QQQI will be the ones that we primarily invest into for the foreseeable future. We still will keep WPay, YMAX, BTCI, and blocks, but we won't be investing into them probably for a little bit. And then looking at VTI and SCHD, we'll open up another position into SCHD at some point soon. And yeah, so looking at the dividends received, you can see here on the right that we had $370 in December. So we started in November, had $180, $370 in December, $381 in January, largely because of XDTE and QDTE payouts, significant payouts, and then VTI as well. And then February down to $278, which is still $100 more than we were at, 4 months ago at the end of November. So not terrible. We're going up still, so we're moving forward with that. Our scenario here looks like we will, according to Snowball, achieve it in approximately 5 years. But we're going to try and do our best to shrink that down a little bit. And then the one thing I did want to show was the diversification between our positions still. So we've got VTI at 33% of the portfolio, 25% is WPay, about 14% is blocks, and just under 10 is YMAX. And this is going to be significantly changing, where we have QQQI, QDTE, and XDTE currently at 5 or less % each. That's going to change significantly, and we're going to move that up the next time we make a purchase. And then our here growth, you can see relative to the S&P, we are down 8.25% according to Snowball, and the S&P is up 0.6 from year to date. So we are underperforming, significantly underperforming the market at this point, but we're going to keep moving forward. I don't think we want to change anything significant after we do this restructure to align with our values a little more. But that concludes our February 2026 monthly SITREP. The mission's going to continue. We're going to continue on into March and try to buy some more assets that can be produce income. As always, this is not financial advice. This is just our personal experiences on this journey. The next update will be a mid-month checkpoint around March 15th. So be on the lookout for that. And I'll see you next time. Thanks for watching.